In 1995, the National People's Congress passed the Commercial Banking Law, which enabled the Big Four to operate more like genuine commercial banks and segregated the business operations of banks, securities firms, and insurance companies. The separation subsequently led to the establishment of 3 separate regulatory agencies to oversee each industry. The China Securities Regulatory Commission, CSRC, was established in 1992 to initially oversee the 2 stock exchanges, but also given supervisory responsibility of the securities market in 1998. The China Insurance Regulatory Commission, CIRC, was established in 1998 to oversee the insurance industry. Lastly, in April 2003, the China Banking Regulatory Commission, CBRC, was established in 2003 to oversee the banking industry. These 3 agencies assumed the majority of the regulatory and supervisory functions of the PBOC over financial institutions. Together with PBOC as the central bank, the above 3 highly specialized and mutually independent regulatory commissions make up China's financial regulatory framework. Different regulatory commissions are responsible for the administration and supervision of different financial sectors, namely banking, securities, and insurance. This sectors-based regulatory model corresponds to the segmentation of financial services and markets in China. It should be noted that certain other government agencies also perform important regulatory functions in the financial markets. For instance, the Ministry of Finance has the authority to make strategic and policy decisions on finance and taxation, set accounting criteria, and issue treasury bonds. The National Development and Reform Commission is empowered to approve the issuance of corporate bonds and get involved in making financial and monetary policies. The National Audit Office has responsibility to audit the financial accounts of state-owned banks, securities firms, and insurance companies. It is worth noting that all the above government agencies, along with the People's Bank of China, the CBRC, the CSRC, and the CIRC, are ranked equally under the direct leadership of the State Council. Next, we'll introduce those regulators in details one by one. First, the People's Bank of China is the central bank in China, a role legally confirmed by the law on the People's Bank of China. As with most central banks in the world, the People's Bank of China performs a threefold role as the currency issuing bank, the bank of banks, and as the government bank. According to the People's Bank of China law, as a currency issuing bank, the PBOC is the only authority to issue currency, namely RMB, and regulate its circulations and to formulate and implement monetary policies. As a banker's bank, the People's Bank of China acts to provide payment and settlement services, to regulate interbank money markets, interbank bond markets, foreign exchange market, and gold market, and to combat money laundering activities. As the government bank, the People's Bank of China is responsible to manage the official international reserves, to participate in international fiscal cooperation, and on behalf of the state, and to act as fiscal agent. The foreign exchange reserves of China are the state of the People's Republic of China holdings of cash, bank deposits, bonds, and other financial assets denominated in currency rather than China's national currency, renminbi. In the end of 2017, China's foreign exchange reserves totaled $3.14 trillion, the highest value since September of 2016, and also higher than the foreign exchange reserves of any other nations. The value of gold reserves increased to $76.47 billion at the end of December 2017. Foreign exchange reserves in China reached a record high of $3.99 trillion in June 2014. During 2015 to 2016, under the pressure of RMB depreciation, China's foreign exchange reserves lost more than $1 trillion. As a fiscal agent, the central bank keeps the deposits of the central and the local governments and makes payments on behalf of governments. But it doesn't pay interest on government deposits. It buys and sells foreign currencies on behalf of the government.